Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I am your host, Justin Dixon, and today we've got Bryan Mabry on the podcast. He is a partner at New North Ventures, which is an investment firm that invests in companies that have both a government and commercial application. Really interesting episode because we dig into Bryan's background, which is kind of unique. He started his career in the military before moving and working in the government and the CIA, before moving into the startup and the kind of venture capital space. So we talk a lot about the differences of investing in companies that have both a government and commercial application versus just a commercial application, the benefits, maybe the drawbacks. But I think you get a lot out of this episode. So let's get Bryan on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, Bryan, welcome to the podcast. Thanks for being a guest.
Thanks for having me, Justin.
Awesome. Well, let's jump right in a little bit. Share a little bit about where you are, who you are, and kind of what you're up to right now.
Sure. Yeah. Thanks for having me. Bryan Mabry, I currently am a partner at New North Ventures. We are headquartered in Portsmouth, New Hampshire. We're an early stage venture fund, focused pretty much exclusively on dual use and critical technologies, generally flavored around the national security space. Our Fund 1 portfolio is about 17 companies, some of which you might have come across a few names in the media recently. And then as we're moving on into our second fund now, we're focused on the same space, but taking a little bit more of a sort of traditional hands-on approach, some larger investments in a smaller list of companies, but still focused on those sort of critical and emerging technologies that are supporting both commercial and government use. Started my career in government myself. First 13 years I spent at CIA in one of the operational specialist units there, largely working in war zones and some of the more conflict regions. Got out in 2015, went to work for a global infrastructure company, sucked back into government, surprisingly, and as an assistant secretary on the foreign aid side. Did that for a few years. And then since 2019, have been out working in the startup and early stage growth space with companies, both on the operations side, leading a few startups, as well as on the investor side. So served as the head of a London-based tech company here was my first role, and then presently serve as COO of Onyx Industries as well, which is headquartered in Tysons, Virginia. It's an advanced military technology company focused around remote weapon systems and some autonomous systems there. So was privileged to have the chance to come into New North as I went through my career later, and now focus more so on the investor side.
Awesome. Well, there's a lot to unpack there. I want to start with the CIA, and obviously we're recording this, so don't tell us anything very confidential. But talk us about how that was working in the CIA. You know, obviously there's shows about it. There's all this, cloak and dagger stuff that goes on, and I'm sure it's somewhat real, somewhat not. But maybe talk about what you did there, and how was it working in the CIA versus the startup world, which is obviously much different.
Sure. No, I think one of my favorite lines of one of my colleagues who worked. So the agency obviously has a large staff contingent, but also uses a lot of contractors, and we're partnered and integrated with the military. One of my very close friends, first line when we were in Baghdad early on was, he's like, "You guys are nothing like the movies," and it wasn't a term of endearment. So, there is an element of truth in a lot of things. I wish we were as cool as the movies make us, but not to downplay the organization in any way. They are capable of some amazing things, and I very much enjoyed my time there. And for me, I think the things that translate across those worlds. So I ended up kind of working in a group that ultimately was focused on the protection and securing of folks in conflict areas or denied areas. So we enjoyed relative anonymity until the whole Benghazi scenario happened. That was my group, which was the global response staff, and then the movie 13 Hours made us quite public thereafter. So I had the privilege of serving in that group, and then also leading the training element of it for a time before that. So I think the things that translate really to the startup world particularly are just the sort of the ability that you must have to adapt and to be flexible. Certainly, the traditional mantra, the cliche of no plan survives first contact is I think applicable in both of those worlds. I certainly have seen that in the startup world many a time. The most well orchestrated plan, and whether it's a funding plan or a government contract or what have you, inevitably, the proverbial shit happens, and as it will in all facets of life. And so how you react to that and how quickly you react to that, I think, are very translatable skills across both of those sort of sectors.
And I guess going back into kind of New North, maybe walk us through how you got introduced to them. Like what was the kind of the entry point, and I guess maybe even before that, what caused you to want to kind of move out of very big government CIA working in war zones and in conflict zones all over the world to startups?
Yeah, it's a great question, and I wish I could say that it was some well architected life journey plan that I had for myself that came together seamlessly. But so New North was founded in 2021 by Brett Davis and Jeremy Hitchcock, and Brett was a good friend of mine. Served in the agency, was quite a legend there for his entire career. Previously served in the Navy. Prior to that, and had the good fortune of working with him. Kept in touch with him after he retired, and he ended up getting in touch with Jeremy. And so Jeremy Hitchcock was a incredibly successful entrepreneur, had founded several companies. He had sold his first company, Dyn, which is a large internet infrastructure company, to Oracle, and a very successful exit, and gone on to launch several other companies and advised a number. He had been investing personally in a number of early stage companies, and he and Brett got together and decided to form New North. And so that was sort of the initial impetus. I was introduced to them through Brett. And then unfortunately, shortly thereafter the founding, Brett passed away from cancer very, very suddenly. And so Jeremy continued on with their vision, and New North continues in that form today. We brought on several other venture partners, other folks from both industry and government. And so New North, I think one of the unique differentiators is the sort of diversity of the folks that are involved in the organization. And that expertise is then obviously, subsequently available to portfolio companies and LPs alike. So I had been sort of in their ecosystem, doing a little bit of deal flow and a little advisory stuff over the years. And then Jeremy reached out and said, well, what would it look like for you to come into the fold? And so I jumped at the opportunity, and I've been able to be a more involved part of the team, which has been really, really exciting. To your question about how did I make that pivot, I think for me, I was 14 years into my career and 14 years away from retirement eligibility on paper. And so it was truly a crossroads of sorts. And, if you would ask 22-year-old Bryan, he would have said he was going to, retire at 50 from the agency and then probably go work for a Raytheon or Northrop Grumman or whomever. And that was kind of where I saw that initial path as I got more involved, and particularly one facet of the training role that I held with my old unit was doing a lot of test and evaluation of new and emerging technology that we were deploying, which was really exciting to me. But in doing so, you also get to see the sort of pain points of these early stage companies that maybe have some truly revolutionary technology. And then you might turn around a year later and say, oh, well, where was Justin's widget, from company X? Oh, well, they don't exist anymore because they folded. And so getting that sort of painful lesson of what, the colloquial valley of death is a real thing, and understanding that, particularly when it comes to government contracting and companies that are supporting that, being able to translate that to investors who expect sort of, a unicorn return on an early stage VC company, or obviously that's the ideal, but explaining to them that that unicorn return might be 3 years away because that company's only doing business with the government. And that's nothing to do with the company's prowess or success, but it's everything to do with the traditional, bureaucracy and procurement. And so I found myself kind of in a unique position to be able to speak to both of those roles. I served as a contracting officer when I was in government, and so was doing some of that acquisition directly and overseeing some of those contracts. And so I found myself kind of with a wide lens of the pain points on both sides, and so kind of set about trying to minimize that pain where I could.
Yeah. No, I think it's interesting. And I think the one thing I wanted to kind of pull out a little bit around kind of New North, because I know some people that invest in GovTech and some people love it because it is somewhat secure, but very, very difficult to get through the bureaucracy and the paperwork and the procurement side. But it's almost like once you get through that hurdle, it's almost not, I don't want to say easy, but it's easier, right? And also that's kind of your moat to, competitors that want to try to enter that market. But correct me if I'm wrong, you guys have more of a dual use kind of requirement for the companies that you invest in. So they can be applicable to the government, but they also have to be applicable to the general population. So maybe talk a little bit more about kind of that kind of dual mandate as you're evaluating, companies both on the investment side and then, once you get in there and how that operationally works.
Sure. No, so you're absolutely correct, Justin. That's our focus for our thesis. And so, I always give the example of we wouldn't invest in just a missile company, but we might invest in a guidance company that provides guidance systems to weapons, but also to commercial airliners. So some of the sort of underpinning technologies are things that are interesting to us. I think I'll give an example. One of our Fund One companies that's been in the news quite frequently lately is Reality Defender. So they're focused on deep fake detection, which is obviously applicable in both everyday personal life and of course on the government side as well. And so those are the types of things that we look for that have that. On the investor side, there is also the sort of the valuation of a government contracting company exclusively differs than that which is focused in the commercial space. And when you can marry those two together, you're able to change that multiple for a company's valuation. Similarly, we've all unfortunately been privileged to a few government shutdowns and funding delays and budgetary challenges lately. In those instances, the government's not awarding new contracts in most instances. So no new starts are allowed. You might have a government contract that's in flight with your company, and it may or may not be allowed to continue to be funded during those funding suspensions or extensions with that. So having both facets in your quiver as a company allows you to mitigate some of that uncertainty. There's always risk, of course, on all sides. And I think, the traditional mindset of, government contracting is, well, it's stable. Yes. To your point, it absolutely is longer to get yourself sort of rooted in that. But once you're in, you're in. But I think and this is by no means meant to be a political statement, but I think, what we saw with Doge and the sort of lens that was applied to that negated that sort of, traditional certainty in that space. And so, there's a number of companies that particularly some of the large sort of support services primes in the government space that took, significant cuts initially there and subsequently the subcontractors of the small businesses that rolled downhill from that. It really changed the landscape. And so I think from an investment side, that's made folks, a little bit more hesitant to put all of their eggs in one basket or the other. And so I think it's an interesting and a good time to be invested in the dual use area for those reasons and in many others.
Yeah, I totally I totally appreciate kind of the not putting all your eggs in one basket because you never know when that basket's going to close or topple or something. So I guess when you're looking at these companies, are they mostly pure tech, like SaaS style businesses, or are they also kind of hardware services? Like what's the typical kind of target investment? Maybe, and maybe it shifted a little bit from Fund One to Fund Two, given that you're being a little bit more selective and more hands-on in Fund Two than more of the traditional VC fund approach in Fund One.
Yeah, I think so. For us, we are all over the place in that sense. We do have some hardware. I would say we certainly favor software more so
Mm,
for the preponderance of our existing portfolio. Another company in Fund One, Havoc AI, is a an autonomous maritime platform. So there's physical hardware, physical boats that are out, and so we do play in that space as well. We just had an announcement in the last couple of weeks. Our first investment of our current fund into a company called Psionic, which is based down in the Virginia Beach area, and they're doing some remarkable work, on the navigation side, precision navigation. So if you think about anything that is going to transit from the Earth to the Moon and back in the next 10 years or so, is going to be using their technology, and so things like that. And there's obviously a hardware component to some of their offerings as well. So we look for things of that sort. But some of our other companies in Fund One, Sweep, um, those types of companies are pure, looking more towards software side. We've got some communications companies in there as well, Bluetooth to space communication capability, and then we've got some traditional sort of more. Uh, I guess we'd call more, traditional cyber type
okay.
companies as well in Fund One. So we're pretty diverse, but we personally tend to lean more towards the software side of things.
And then you mentioned kind of that there's a potential pivot from Fund One's kind of strategy to Fund Two. I'm curious about kind of the Fund One, kind of what was some of the uniqueness that you guys brought to the table from structuring deals, or because if you're funding things that do work with the government, are there things that you can bring to the table from a government perspective that were available to you, and then how has the pivot changed to kind of the strategy for Fund Two?
Yeah, so I think on the Fund One companies, the access that we as a firm have from being formers from a lot of the customer base that these companies are looking at on the government side, is allows us to kind of have that end user perspective of the utility of a product or of a company. A lot of times companies will have some truly incredible technology, but rightfully so, if their founders are not from within that sort of spookier side of the house, they don't actually know what the requirement is, or
Mm,
they may have designed it for purpose X, but on the backside of it, purpose Y is far more interesting to a specific client set. So
yeah.
we sit in a great place to be able to sort of translate that back and forth and have that visibility on both sides. So I think that's one of the things that we've helped with our Fund One companies and trying to leverage those. I think as a VC for us, we a lot of VCs play very well with others, and share deal flow, and I think we do a good job of that. I hope so. And so I think for us that's a strong suit. But I think one of the things that we think about a little bit differently as well is we maintain a lot of relationships with PE firms, and so as we look to sort of graduate those companies out of Fund One, as they grow, I mean, we want them to outgrow us, and
Right.
so that's something that we want to be helpful along that journey, and that's one of the things I think that we place a lot of emphasis on, which kind of takes me to the second part of your question with regards to how we're thinking about Fund Two. And so the pivot there is kind of, as I mentioned, Jeremy is a founder and a builder, and that's his world and what he's been incredibly successful at doing. He came into investing, and running the venture side later, but he's built several wildly successful companies, and so we've got this expertise on hand from a founder and growth side, and so we've also taken the focus on Fund Two of allocating a certain percentage of the capital for purely incubation. And so
Mm,
doing entrepreneur in residence type work. Some of our companies in Fund One are the results of that. I'm familiar with the Department of Defense Skill Bridge program. It's a
yeah.
transition program for veterans that are getting out, and particularly in the SOF, special operations community space. And so we at New North have a pipeline of those folks that come through. and intern with us, and some of whom have stayed as entrepreneurs in residence, and we've built companies around them because they've shown up with a great idea, and that's something that we've been able to sort of not only lend the industry experience or the growth expertise, but the capital to launch them. And so we've got a company in Fund 2 that's a small reactor-based company that's starting in that vein right now, and then several in Fund 1 with more capital for Fund 2 allocated for that purpose as well. So the ability to sort of grow the company is a lot of venture firms. And it's not a ding on venture. It's usually a function of check size. If I'm giving you a check for 10% of your company, you're going to say, thank you very much for the support. But when I show up at your board meeting and I'm trying to move levers and turn needle, that just doesn't jive with the traditional model. And so we felt like we were missing out on some of that value that we offer. And we had a number of companies with whom we were having early stage investment discussions that said, we like your money, but we really want you. And so that kind of drove that decision to focus on that. And the Psionic investment that I just referenced that we just publicized, that will be the first one, or is the first one of those models. And so Psionic has a fantastic team and leadership and board, but we've got a great relationship with them. And so they were really open to us, being more involved than you would traditionally expect from a venture firm, and partnering with us truly, rather than just being a funding recipient. So that's something we're really excited about, and we're looking to replicate that across a few other companies that will then ultimately comprise what Fund 2 will consist of.
Yeah, I talked to somebody about the Skill Bridge program because I had a company, a client of mine on the recruiting side that was kind of a perfect feeder for that Skill Bridge. And we're still kind of in conversation about how that could work out. But it's an amazing program because it's you get somebody for free, really. Like it was like you get an experienced military operator. They had to be a certain level, I think, coming out of the military, I think, or some designation. I can't remember all the details, but you get to work with them for free. And the hope, it's not a requirement that you hire them post the Skill Bridge program, but that is the intent, obviously. But also the intent is to give them real world corporate experience, so that if you can't hire them or won't, that they could at least go get another job, because that transition from the military to kind of civilian lifestyle is not the easiest thing, especially from trying to find a job perspective, because military jobs are not one-to-one. There's not an exact replica in the corporate world. And from my experience recruiting a lot of military people in my career, trying to translate what you did in the military as your quote unquote job is very difficult to align that with a job description for XYZ job at a company. So I think that Skill Bridge program is a really interesting opportunity for companies that most probably don't know a ton about.
No, I can't say enough good things about it for all the reasons that you just mentioned. I mean, we've had some fantastic folks come through, and there's also SOCOM, Special Operations Command, also has a specific sort of fast track pipeline, the Warrior Transition Program, that companies are eligible for as well. I've had them at several of my companies, and it is. I mean, it is. For folks out there in listening land, I mean, the government continues to pay their salary. They are available. The only thing they can't do, and rightfully so, is they cannot represent your company back to the government while they're still being paid by the government. But if you want to hire them the day after they retire, then by all means. So, but it really is a great opportunity. I mean, at New North, we've had a number of folks. I said some of whom have gone on to become founders within our portfolio. And some of whom, I mean, I've got a close friend here in Philly who, was a West Point Green Beret, interned with us through the Skill Bridge program, and now he's at Wharton and he's be an investment banker. And so it's a pipeline that's really great for all folks involved.
Yeah. And now that you're getting kind of more involved, kind of more of a almost traditional PE model, are you are the companies that you're trying to invest in, they're looking at you obviously for the money and the capital to help grow the business, but also a lot of times entrepreneurs, while the money is great and needed, they can get it other places, but really what they need is, expertise. They need access to certain demographics or pipelines. And obviously in your world, the government is obviously, something that not everybody can access as easily as somebody that knows how to navigate the waters there. So is it kind of a 50-50 of like, we need the money, but we really need the access and the expertise and the operational support?
Yeah, I think it's so for us specifically, I think with New North, I would say it favors more heavily to the expertise and the access. Obviously, you nailed it. There's plenty of money out there for folks. I don't typically use the term smart money and dumb money, but that, in that, it's funny to me because the only people that I ever hear actually use that are folks in PE, and they're like, I'm the dumb money. But usually the ones that say that are not dumb at all, to be clear.
That's right.
They're usually the most well-connected in my experience. But I think, for us, the value is that sort of, successful entrepreneurialism, government access, understanding of the landscape, and then having, run startups ourselves in the government sector and the commercial sector and dual use. It's that perspective, I think, in the example of another one that we've got on the horizon right now, we're potentially considering, they probably could raise their capital elsewhere and be fine, but that's not really what they're after. They're after the relationship and what they see our value is. And so, which we're very proud of that and very happy to leverage that and be involved. So that's kind of where I think our selling proposition is in that context.
Yeah. I want to talk a little bit about deal flow because I remember around this time last year, I was at an M&A conference in Scottsdale. It was January 20th. Trump was, being inaugurated into the White House. Everybody at the conference was all about, this is going to be the year that the dam breaks and all this M&A activity is going to happen, because it had been kind of, mostly on the sidelines, 23 and 24, just with higher interest rates and all the other fun stuff. Obviously, that didn't transpire for most people in 2025. So I'm curious, kind of from your perspective, given that you're dual use, gov and commercial, did you see a downward kind of trend in 2025 from a deal flow and quality of deal perspective? And then would love to get your kind of forecast or maybe hopeful potential outlook for 2026, even though we don't know what's going to happen yet. So.
Sure. Now, so on the 25 front, I think it definitely, I think from our perspective, I think I would say it was, and there's a lot of articles out there to sort of support this theory. I think it was much more difficult to raise capital for venture. And I think that there were, on one hand, there was a lot of positive narrative around the sort of streamlining of government procurement, particularly in the defense space, and all of those are great, great things for startups and great things for industry, and hypothetically will advance, procurement and all of those things. Speaking with a former government hat on, I think one of the challenges, and I still have some folks in, some of the procurement aspects and facets at GSA and folks like that, they are challenged with, we understand the mission, we understand the directive, but the underpinning bureaucracy that supports and enables those things isn't quite as quickly to adapt as a pen stroke and an executive order or all of which. It's not that those institutions are resistant or trying to be obstinate to slow that sort of change. It's just that it is, the government bureaucracy at its sort of core. And so it's a little bit of, they don't know what they don't know in trying to sort of affect those new changes. And so I think that slowed a lot of things. I think particularly with early stage companies in 25, between the shutdown and some of the uncertainties with, some of the DOGE contract cuts and things like that, a lot of folks were just sort of biding their time to say, well, it's one thing, I think, for a more traditional pure tech company that's supporting both facets, but I also know companies that were supporting, for example, a colleague who founded a company that's uses AI for grant proposal response, particularly in green initiatives. Well, that sector kind of went away, and so
right.
it's can you adopt that technology to have a more broad use? The answer is yes, but that takes some time. And so I think certain, I don't want to call them unique situations, but there's a confluence of events, I think, that made it a tougher year than folks anticipated, for to your point of expecting this sort of dam to break on that. I also think that some of the larger primes, it's going to be interesting to see how this plays out downstream. As you saw some of the cuts against like Deloitte and Booz Allen and some of those large sort of traditional primes, you also saw those companies earmarking significant money for venture. And so that hasn't yet really begun to sort of roll out. And it's and I'm not privy to their exact plans by any means on that, but I think you're seeing 100, $500 million, earmarks within these large, corporations that are going to be ostensibly put towards venture investments, which is a pretty general term. But I think how that makes its way into 26 will be interesting in that space, because I think that in the GovCon space, that the traditional sort of large scale butts and seats advisory services stuff has all gotten very significant scrutiny. And then subsequently, if the alternative investments come in the form of venture or acquisitions or incubation of small technology, and I'm thinking in those contexts, around AI enabling consultation, that kind of things that can make the government more efficient, whether it's supply chain or ordering or all of that stuff. Those large primes may well be likely the implementer of that, but they're likely buying that capability through, or funding it through a venture firm, necessarily than building it organically. So those are kind of the things, particularly in the federal space, that I'm interested to see how they play out in 26, which I think, hopefully time will tell.
Yeah, no, I'm going to the same conference in a few weeks, so I'll be very curious to hear the sentiment from the lower middle market PE folks and see kind of what they're seeing. Hopefully, they're seeing maybe a more realistic, or maybe the outlook hopefully is a little bit more rosy than it was. I mean, obviously it was at its peak last year, but then it kind of really fell off a cliff pretty quickly as far as that goes. And I before we talk a little bit about AI, because we'll have to talk about it, everybody is, but I guess for you guys being kind of exposed to the government sector, while you're dual use, you're still exposed to it. So some of the things that happened specifically to the government, DOGE cuts, the shutdown, probably added a little bit more rigor or pain to kind of the deal flow for you, as opposed to a venture firm or a PE firm that is more focused on just more B2B SaaS, and maybe selling to the government is a bonus but not a requirement.
Yeah, I think we were very fortunate. I mean, with our portfolio, to not really have a lot of direct impacts from some of those cuts. I think on the flip side of it, on a deal flow perspective, like we saw, and then this is a geopolitical influence, not necessarily a domestic one, but we saw an absolute deluge of like UAV and UAS manufacturing companies. I mean, I kid you not, I probably got 20 to 30 of those a week coming through our initial filters. And so I think there was a lot of an ecosystem that built around that. There's a lot of that that's happening, obviously in Ukraine specifically, but there's also a lot of U.S. Entities that are trying to sort of prop up or capitalize on that, and that became a really, really heavy thing. And for us, at New North, as I mentioned before, like I'm not interested necessarily in the ability to manufacture a novel aircraft. I'm interested in a novel way to communicate with it, or how it can, communicate when, it's in a denied or a GPS spoofed area. Those types of things, those are interesting because that's more universally applicable. But as far as a payload capacity and those kind of things, they're all very, I'm not to say those aren't successful businesses, because they are, and they can be, but they don't have venture scale, as it were. And so, there's a lot of sort of bespoke mission specific manufacturing going on, which is very necessary. And putting my old life hat on, that's exactly what I needed. But from an investor side, that's not the wagon that I'm necessarily going to hitch my fund to, because even if every special operations tier 1 unit in NATO bought it, that's still only going to take me but so far.
Yeah.
And so that's kind of how we think about those things. And it's not to downplay the technology or the success of those founders. It just doesn't necessarily fit within the model of a lot of early stage VCs.
Yeah, you're evaluating through a different lens, but not practicality and usage. It's more, can I make money on this, and can my investors make money on it?
Correct.
So I'm curious about the AI thing with regards to the government. Like, how are they looking at AI when they're looking at investing in companies? Like, is it as, I mean, everybody and their brother, you know, when they have a SaaS business or a software company, like they're implementing AI all over the place. You know, they're putting AI in the name. Obviously, you mentioned Havoc AI and everything like that. But I guess I'm curious, kind of, is the AI component of a business as necessary for the government, and more looking at it from the government's perspective, knowing that there's a lot of obviously security measures that need to go into place, but also from an investment perspective, like how do you and New North think about it as it relates to government ability to adopt AI and things like that?
I think, you know, for an adoption perspective, I think the places where it's easiest to make a clear-cut use case that is, I don't want to say not security constrained, because it's absolutely security constrained, but in the context of, if for example, navigation. So, you know, if I'm using an AI model to fly a UAV in a GPS denied area, and it's using AI to terrain recognize what it's flying over because it has a preloaded satellite imagery of that thing, it says, okay, I see this mountain, I'm here, I know where I am, even though nothing's talking to me. So that application of AI, for example, from a navigation perspective, is one that's you know, a pretty easy and clear cut use case, and it's an easy one to adopt because it's a problem. And so I think you know, things along the communication and navigation veins that use AI. You know, my company Onyx, like we use AI in target recognition. So we have a remote autonomous weapon system that is scanning an area, and it knows to look for people, drones, and vehicles. And so I don't need to watch it. It sends me a message and says, hey, one of the things you told me to look for is in this space right now. What would you like to do? And so, you know, that's applicable for non-kinetic ramification, you know, as well. That could be as simple as, you know, I mean, home security cameras that many of us have. I mean, a Ring doorbell has that built into it. You know, show me when it's a package versus a human. So, you know, the government has gotten, I think, pretty comfortable at adopting those things at a more advanced level. You're starting to get into things around, you know, some of the deep fake detection, like we were talking about, using AI to truly, into that. I spoke with a company earlier that you know is doing some remarkable things around using actual human vital statistics to identify what's real and what's not. So, you know, okay, I see you, Justin, but do you have a pulse, or do you have a blood pressure reading? Like those types of things that can't be replicated necessarily, or require a significant complexity to do so. So I think that those are the areas where it's quickly being adopted. From an internal perspective, running AI in a classified system is you know, it's absolutely, you know, happening. But I think, you know, that's one where, you know, you've got every sort of leading AI company, your Open, your Anthropics, all of those folks making significant investment in getting or staying deployed in classified systems because of that. And so,
got it.
You know, I liken it back to, you know, AWS, you know, 15 years or so ago, when they got GovCloud figured out and became the, you know, cloud provider at the time for the intelligence community. Whoever wins that race in that same vein will be, you know, I think similarly sticky, you know, in that community. And as the GovCloud contract has, you know, matured over time, you've seen, you know, sort of the other big players get involved and jockey back in, or the government finally comes around and says, I don't like that this is a monopoly. Who else can do this? And then they open it up to a multi-award. And so I think, just based nothing solely other than on historical behavior, that's probably what we'll see with AI. I think you'll have an immediate sort of prime victor who emerges as the sort of lead. And then I think you'll have the government then subsequently say, all right, great, who else can do this? And you two are going to play nice together, whether you want to or not, because somebody will advance one capability more than another. And ultimately the government's going to want the best of everything they can get.
Yeah. If founders are out there listening to this and they have a product that is applicable to a commercial application, is it necessary, or do you think they should try to figure out if there's a way to use that in a government setting? Obviously they would, if they don't have government access, they would need to get that in order to make that process a little bit more smooth. But if they're like, holy crap, this thing that I've built that works in ABC company could also probably work in the government. Like, how do you think about that from like a founding perspective of like, should you or shouldn't you?
Yeah, it's a great question. So I'm laughing because anyone that's seen me speak at a panel has heard me say this probably ad nauseum. So there's two schools of thought, and I've been through this with one of the first startups I worked for. You either have a product that you want to get right for the most discriminating customer, so i.e., the intelligence community. If it's good enough for them, if it's good enough for the top tiers of the military, if it can stand up to their security testing, et cetera, then it's probably good enough for everyone else. So that's one approach and one school of thought, which I don't disagree with, but I will caveat that with saying the road to that, the accreditation time, the testing time, all of that is almost intolerable to most any investor. So unless you are just a wildly self-financed, company that can handle that, an Anduril or somebody like that can ride that wave while the government gets through its wickets, that's a challenging way to go. Whereas I think if this were 20 or 30 years ago, my answer would say, well, you know what? You need to figure that out because that's what you're going to have to do. Now, I think the government has become more cognizant of those challenges, and a lot more decision-making authority from a procurement perspective, or at least signaling a demand, has been pushed down to the operators. And so if I walk through Soft Week or a demo at, Fort Bragg, and I say, oh, I'm so-and-so in unit whatever, and I really need that thing. Yeah. They're going to figure out a way to get that thing inside or get it accredited so that I can use it in the meantime. And I think, so, from a founder's perspective, if you have those insights of that, or you have that access to end users that can validate the need, and similarly could say, hey, you know what, this thing's great, but they are not going to be able to use it until you do X, Y, and Z. Then you can explore things like maybe pursuing non-dilutive funding through a SIBR or through, some sort of research grant, those types of things that Department of War or any of the works, the AFWorks, SoftWorks, this sort of Defense Innovation Unit, you can pursue some funding there to try to take it from here to here. But don't eat that on your own unless you have a very clear runway. And the only other cautionary tale that I always tell founders, particularly focused in the government space, and the IC is woefully guilty of this, is you better have a clear roadmap for your development and be able to stand by that to a point. Now, you want the iterative customer feedback and you want to improve and you want to be able to meet those demands. But I've seen a lot of non-programmatic level funding, like onesie twosie, I've got year end $2 million, and Justin, I really need you to make that Peloton go like just a little bit this way instead. You're like, sure, I can do that. Well, now you've taken yourself off of your roadmap and you've got to fund yourself to get back. Or you've created a bifurcated product line that now requires twice the money to maintain. And all of those things are fine if that's a decision that you willingly go into. But it's very easy to chase shiny objects in government space, particularly with that sort of spot and program funding that comes in. So I've seen companies die many times when they had a fantastic offering for inability to stick to their roadmap that ultimately didn't get them to a program of record in enough time to save them.
Interesting. Well, I don't want to end this on a somber note, but I guess I'm curious a little bit about maybe, now that New North's got this second fund that you're working on and you're deploying capital out of it. Sounds like. What do you think? Like, if we jumped on a podcast a year from now, like, what are two things that you guys are trying to accomplish in 2026? Whether it's deploying capital or hiring people or whatever the case is. I'm just curious, kind of what that would look like.
Yeah, I think so. I mean, firstly, I think you'll see a lot of additional growth from our first investment into some adjacent space as well from where they are. I think you'll see some incubation related companies get launched. Some of those will be probably in partnership with that company. So we've got a number of companies that sort of work around the autonomy in the maritime space, and there's a lot of sort of synergy around that Virginia Beach, Norfolk area in particular around some of those companies in conjunction with some of our portfolio one companies. So I think for us, to me, success would be, having that first investment really cooking and kind of showing, proving the model of that side. Another investment, at least into an additional firm, and then having some early stage entrepreneur in residence incubation companies up and running in the early phase. And we've got one that we're working right now that hopefully you'll see in the next couple months as an outward facing productized software offering that we're really excited about. So that's one that we're building organically internally right now. So getting those things across the line, I think would be a great year for us from my perspective.
Yeah. Well, it sounds like you don't have a lot on the docket, so 2026 will be a nice slow year for you.
We're looking forward to taking it easy. Yeah.
Yeah. A couple of vacations in the middle of that, all that fun stuff. Awesome. Well, Bryan, I'd like to end the podcast like I end every podcast with a 3-pack of questions. So first question here is, what's a book that you or podcast that you would recommend that maybe you found helpful or useful?
My favorite book is actually a classic that I don't know is helpful, but for me, it's just sort of like, I think there's a lot of great life lessons in it. I'm a huge F. Scott Fitzgerald fan. And so The Great Gatsby, it's sort of a dark book in that sense, but it also, I think, has a lot of lessons about, just sort of being true to yourself and following your initiatives. Podcast, I will make a 100% shameless play. So New North Ventures has Securing Our Futures podcast. Okay. We have a number of folks on there, great senior government leaders, a number of successful entrepreneurs that I find to be really great perspective from a lot of different folks. It's not always New North people on there, to be clear. So we have a good run of that. And I'll also put in a plug for the Spy Museum Spycast. I think, on the government side, Chris Costa, who runs the Spy Museum, is a longtime colleague of mine and friend, and he's got some remarkable guests and great conversation. So
interesting.
Gives flavor into a little bit of the geopolitical side, but also some industry, and he has some great sort of leaders of large corporations on there as well.
Yeah. No, awesome. I will check those out. I didn't realize you guys had your own podcast. That's pretty sweet. I like it. All right. Second question here. Favorite thing to do outside of work?
I think when I can make myself do it anymore, love to work out. Just, fitness in general has always been important to me. As I've gotten older, I've reframed a little bit how I think about it, but love to do that. And then I am absolutely a foodie, so really enjoy the restaurant and wine scene. So those two things sort of offset one another mostly.
You do the workout and then you go out to dinner and have some wine.
That's right. So I immediately negate any positive facet of the front end. But no, I really enjoy that. I mean, I think exploring restaurants and cities and different cultures and being able to enjoy those types of things is something I really enjoy.
Yeah. Yeah, I had a buddy who was very heavy into working out, and then he would always eat like Chinese food at lunch. And he's like, I do the workout so I can eat what I want.
Exactly right. Yes.
I just, if you don't do the workout, you shouldn't eat what you want. Most people do, but yeah, he did one so he could do the other.
100% agree. It's all things in moderation, including moderation, as they say.
That's exactly right. Awesome. All right, last question here. Favorite vacation spot?
Without question, and it's a doozy to get there, but the Maldives.
Okay.
That it is certainly not one you want to put on the docket once a quarter, but absolutely worth the trip.
Yeah, because it's what, like a 24-hour, it's like a day trip.
I have never figured out a logistical way to do it in less than 40 hours of total transit time, because there is a layover flight in Doha that I cannot figure out how to get under 8 hours. And so you're hanging out there. And then when you get to Male, you've got to wait another couple hours for a seaplane. It is. Don't go for less than 10 days. But
I was gonna say, don't go for like a long weekend.
Yeah, no, absolutely not. Yeah, you will hate life, but it is well worth it when you get there.
Awesome. Well, Bryan, really appreciate you being on the podcast. If people want to reach out to you, maybe they want to learn more about New North and what you're doing, or pick your brain about government, kind of the government space, what's the best way to connect with you?
Yeah, absolutely. So we've got New North website. Can connect with us there. I'm on LinkedIn, Bryan Mabry. And I'm Bryan at newnorthventures.com. So please do, and be glad to connect. And really appreciate the opportunity to be on with you, Justin. It's been a fantastic conversation.
Yeah, no, I've really enjoyed it. We could definitely have dug in a lot more to some of your stuff in the military and all that fun stuff, but wanted to keep it a little bit more business. Maybe that'll be for the next time. So thank you very much, Bryan.
Sounds great.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.